Okay. All right. So let me remove all this. Let me remove all these ones, right? This was, yeah. Okay. So now a bit of theory, just like I always say, everything is about market structure. Is the market bullish? Is it bearish? Is it consolidating? We don't want to trade in a consolidating market. We want to trade in a trending market. So the market has to be bullish or bearish, right? So if the market is bullish, you are seeing the market making higher highs and higher lows like this. Okay, simple. If the market is bearish, you are seeing the market making lower highs, lower lows like this. Simple. Now, if you've determined that, okay, yes, market is bullish or market is bearish, you now want a market structure shift on a lower time frame. So for example, let's say market has given you a bearish structure like this. Okay, now market is bearish in this way, right? It's creating lower highs and lower lows. You've seen a break of structure right here. Right? Now let's assume this is the 15 minutes time frame. Remember, I taught you guys time frame correlation. Time frame correlation, simple. If you are following structure on the daily time frame, you want to see a market structure shift on 1 hour time frame. Right? Let me time frame correlation. Right? So if you are using daily time frame, you want to see market structure shift where on H1. If you are using 4-hour time frame, if you are getting your structure from 4-hour time frame, you want to see market structure shift on what? M15. That's your lower time frame confirmation. If you are using H1, you want to see it where? On M5. If you are using M15, you want to see it where? On M1 or M5, but preferably on M1. Okay, this, you want to know this. This guy here, keep farm for one side. Very, very important. Okay, so now if this is the 15 minutes time frame, right? On this 15 minutes time frame, you've seen that the market is bearish, right? Bear in mind, it can also be like this. There's no difference between these two guys. Something like this, no difference, right? This is a sweep of liquidity right here. And this is the break of structure. So I tell people, it's the same thing. These two guys, same thing. They are both showing you bearish intent of the market, right? So now, what do you expect to happen? Let me move this one here. What do you expect to happen? On a lower time frame, when you've seen that your 15 minutes is bearish, you want to look for a market structure shift where on M1. So you'll be patient enough to wait for this M1 market structure shift, right? Now, you want to see that market structure shift where? In premium. Remember, we are selling, we are bearish. So you want to see it in premium. You want to see it happen inside here, premium. You want to see it happen inside here, premium. Okay, so now because of the season where we are in, the moment Ember is coming, or first week, second week in January, volatility will not be much. So what you'll be seeing is you'll be seeing a lot of annoying consolidations, right? So what you want to try to do is you want to get into the market and get out. Now, the easiest way to get into the market and get out is to see where exactly volume is going to come in. And these big banks or big institutions are going to tell you, they are going to show you when they are coming in. They will leave footprints. They will tell you that, okay, we are stepping in now. Okay, now, how do they tell you? They tell you at the point they change the structure to align with the higher time frame that you are looking at. So, for example, remember, we said that this is 15 minutes here, is bearish. You want M1 to align, to become bearish again. It is at that point, right, that you will get him. Now, this big push that happened here, those big banks should have brought in money, right? But the moment they bring in money, you see that what? Or they take our money, you see that what will happen? You see that markets will drop very fast, aggressively. That's why this drop most times will leave what? It will leave an imbalance. Okay? It will leave an imbalance. That's sign number one. So now what will they do? These guys will manipulate the market to bring it back up so that they can get in again, because they cannot push in all their volume. They will now manipulate the market, come back so they can get in again. At the point that lower time frame now aligns with this guy, that is when you should get in. Now, after you get in, you are now going to see a huge push in the direction the market intended to go to in the first place. And that's exactly what we saw on gold this morning, that gold trade. I hope I've not even played it off. It happened. Okay, yeah, exactly. That's exactly what we saw here on this gold trade this morning. Okay, I will analyze this gold and EU for us to give you the explanation, right? So now what do you expect? This is now M1, right? The market is now retracing. The market is making higher highs. Now, bear in mind, M15 is bearish, but now we are seeing pullback. M1 is what? Bullish. M1 is bullish. It's creating higher highs and higher lows. Higher highs and higher lows. At some point in premium, you now see this happen. Higher high, lower low. Now, this is the market structure shift. Then you now see what will you be expecting? Because it is happening in premium, you will be anticipating an entry that will be lower than this higher high that was created. Boom, something like this. And then the market now continues down. What is the intent? To come and take out this guy here and continue the bearish sentiment. Now, this is the market structure shift. Sweep, break, you can enter with order block right here, or you can enter with a doji. That is within this trading range, from here to here, within this M1 trading range. And these things can typically happen fast, right? So on this lower time frame here, if it is a sell, you want to make it happen in premium, right? You want to take a sell in premium. On this lower time frame, that's where you see me toggle between M1, M3, M5. Now, there are some times that you don't necessarily have to wait for it. I will show you, because the same thing happened in EU this morning. Remember, before that, before the EU sell I was talking about, I already saw an entry and I told you guys, don't take it, right? Don't take it. I will show you guys. But basically, this is it. So now let's look at the EU that happened today. This was the EU that happened today. Now, you need to look at the higher time frame. What is the higher time frame doing? From the 4-hour time frame, we can see that clearly EU has been selling. You want to remain in line with the sales that is happening, right? Now, if you are looking at the 4-hour time frame, which is what we are looking at here, you are looking at the 4-hour time frame. I have seen a sweep here and a break of structure here. Price has tanked all the way down to this point. Then price is now bullish and is pulling back. So what do I want to say? Remember sometime last week, I shared the trade on EU somewhere around here, taking sales that I couldn't call out on time before the move started, somewhere around here, right? And I said price is coming from a bearish 4-hour point of interest. Now, price is reacting off of this 4-hour order block here, right? Where is price going to? If EU is going to continue bearish, it should come and take out this low here. This is where EU is coming to, 1.03314. Anything that happens after that one, I don't know. But EU is coming here. So, in other words, you want to trade in line with this guy. You want to trade in line with this guy until this low is taken out, right? So now, H4 was bearish. Price now came into that H4 order block and switched bearish again. Can you see that? Sweep and a break to the downside. Okay. Now that I know that my H4 is bearish, remember time frame correlation. H4, I want to drop where? To M15. This is called multi-time frame analysis. Now, when you drop to M15, in this current H4, right? This current H4 where we marked out here, this is it, right? This current H4, this is it. So what is the intention of this guy, this H4 here, right? Remember, let's go back to the 4-hour time frame. This is the 4-hour time frame right here. Sweep, current price action, right? Sweep and a break. Now, within this range, and I want to go to where? 15 minutes time frame. Now, when I get to the 15 minutes time frame, what do I want to see on the 15 minutes time frame? On the 15 minutes time frame, I want to see a market structure shift, right? And remember, my current range on H4 is from here, from this point to this point right here, to this level. So anything that happens up here, any market structure shift that happens up here is a valid sell entry. Any market structure that happens from this 50% level up to this place is a valid sell entry. So inside here, what did I see? I marked out this thing on Friday last week. Look at it. This is a sweep, and this is a break. So now M15 is aligned with H4. H4 current price action is what? Bearish, sweep and break. It is bearish. This is the trading range from here to here when price started coming back, right? Overall, it is where? From here to here. And then H42 has now aligned here. Then I've dropped to M15, and at the 50% mark, I am seeing a sweep and a break. Where is the final target for this sweep and break? It is here, this level here, right? Which was why, let me delete this one now. Which was why I marked out this point here, 1.04601. This is technically the immediate target. This one here is the overall target. It is possible for you to swing from here all the way down. It is also possible that a price can sell from here to this point and then reverse back and come into more premium discount, shift again, and then finally drop. Okay, but we are not sure because of how the market has been behaving. So now, what do I want to mark out here? I will mark out my strong high right here on M15. Remember, M15 is now aligned with H4. I will mark out my sweep, my break, and my strong high or protected high. And then mark out what? This other block. What's another block? Another block is what? The last, this is the bearish order block. The last what? The last buy candle before the aggressive sell. Okay? The last buy candle before the aggressive sell. That's this blue candle we are seeing here. The last buy before the sell. You can see this is a buy to sell. Okay? Now, but you'll notice something. We also have liquidity above it, which is this one here. Okay? But I will not set a direct entry. Why? I won't set a direct entry because my stop loss is going to be higher. Right? So you could have set a direct entry here. You could have set a direct entry here, cover this high, and then go for this low. But what's the risk reward here? 3.89. Okay? It's not good enough, right? Plus, we're in a market where, you know, it's quite unstable, it's shaky. Okay? So now, what do you want to do? You will now wait for confirmation. Now, let me cut price back like this. Maybe something like this. Okay? Now, the moment price comes into this M15 zone, you now want to drop to time frame correlation from M15, M1. Price has come into your M15 point of interest. At this point, you will see me drop down to M1. Now, I want to be looking for something that makes sense. I want to look for a market structure shift on M1. Okay, I want to look for a market structure shift on M1. So at this point, you'll be seeing me toggle between M1, M15, M1, M15, because it has to make sense. Now, bear in mind already, Asian high has been taken. This liquidity above here, this liquidity here has also been taken, right? but you will now start seeing me toggle. Now, something happened here that now made me share that trade. But I told you guys that we wait. And if you look at the charts that I sent, you would have seen that, let me just go there. You'd have seen I marked it out. You'd have seen where I marked it out. So let me just open it. Look at, so you can, if you look closely, you will see I marked out something here, right? This marking, I did it on M5, right? But I will now show you guys which alert went up. Oh, nice. Sorry. All right. This is NASA. I missed a trade on this thing as well. DAX German 30. Anyway. But I expect a reaction here. So, but let's see what will happen. Let me continue. Okay, so from this point, I'll come into my M1 and I'll now start, you know, I want to see something that makes sense. I'm looking for a lower high to be formed. So here now, if you are marking it out, even though I don't mark it, I use my eye to look at it, right? If you are marking it out, you see this is a point, this is a point, this is a point. Let me move this one like this, okay? So this is a higher high, higher low, higher high. I want to see this level broken. That will be my market structure shift. I want to see this level broken because at that point, a lower high might be formed. Okay, but you now see me, I'll still be toggling. Okay, so that wasn't formed. Now it was formed. Right now we have a lower low because this high is still there. Okay, it was taken out by a bit. So technically, I can say this is the high now. Okay, so we have a higher high, higher low, higher high, lower low. Okay, now I now checked 15 minutes here. I now saw this on 15. Oops. Okay, so I checked 15 minutes. I now saw this. Now look at this closely. There was a trade here on, okay, this day. This guy here. Same thing happened here. Same freaking thing happened here. Same thing. But I'll show it to you. Now, you just have to be, you have to get used to lower time frames. Look at this. Look at this clearly. Buy, sell, buy, sell. Look at this is a market structure shift. This is a change of character. Closely, you have higher high, lower high, higher high. So what are you expecting? You are expecting price to do what? Create a lower high. This is a market structure shift. So technically, you see this demand level here, this black candle you are seeing here, was actually meant to hold price and send price up again, but it didn't. So there was a shift right here. There was a shift right here. Forget this week that is here. Forget the week. Line chart. Look at. There was a shift right there. So the moment there was a shift there, sign number one. So truthfully, I could have just done this. And the same thing happened here yesterday. Same thing, no difference. This thing happens every single, at least you get it twice in a week. It happened last week as well. Same thing. This guy, see, I see, same thing. Just know how to follow structure. That's all. So now, at this point, I could have taken the aggressive sell. Like, set my limit order and then, cover this high like this. I think I was using 6 pips, 60, right? Cover this high like this, especially if you're using the zero spread account. Cover this high and then go for your 1 to 3. 1 to 3 is the sweet spot anytime. That's all. This was a trade. And then you take your 50% off target extreme, like this, 1 to 10. Okay, so now, but I now told you guys that don't set this trade. 6 pips is fantastic, no problem. Don't set this trade. I want to get M1 confirmation. So now, what am I expecting? H4, bearish. M15 current, bearish. M15 confirmation here, bearish. What am I looking for? I'm waiting for price to come back inside here. Inside here. I'm waiting for price to come back inside there and give me a market structure shift on M1. On M1. That's what I'm waiting for. So at that point, I'll be on 1 minute time frame. I'll be on 1 minute time frame waiting for M1 to come here, right? And do this. Sweep, break. I will enter here and I will sell. At this point, this is what I'm waiting for on M1. The exact thing that happened with M15, I'm waiting for it to happen with M1 inside this M15 zone. Exact thing. Now, remember, that is double confirmation. I could have taken the entry here. I didn't. We waited. We saw M15 align. I could have taken. I didn't because I was looking for M1. Because at times like this, you want to maximize. You want to start, enter, and get out. You want tight SA, very tight, 2 pips, which is the minimum you can set on any broker. You want it. But if you don't set SL like me, I don't set SL. I just tap. And if I risk everything, that's what I'm doing now. What I used to do on synthetic, I'm doing it here now. You get, so you just enter, no SL, no need to set any SL. Once you get your money, you are out. So now you are waiting for M1 to come and give you that same market structure shift inside here. That's what you're waiting for. So now let's play price. Inside that zone, it must happen inside here. Any other thing that happens outside, noise. You don't need it. It's not your business. You get, so the waiting is what takes time, but you have to be that patient. Or you set alerts on this line. Once you set alerts, once price comes here, trigger, you now come, you now start watching price. Okay? So now, remember, at this point, you can be, tracking it. You can say, okay, I want this level to get taken out. Or this level, this is the lowest level here. I want this level to get taken out. So you shall be tracking it. You'll be tracking. You'll be tracking. Because that's the level that makes sense. Okay, so now here, there is already a high here. That's a sweep. And this is a low here that has also been taken. If you want to use this one, no problem. But the right thing to use is this level here. This high, like this low that broke price to the top. So now, if you look at this M1, what are you seeing here? You are seeing a buy to sell, aggressive sell. Now, look at this imbalances you are seeing coming out to break this market structure shift. It is a sign already that the big banks have stepped in. You are seeing imbalances. Now, once you see that sign that they've stepped in, the next thing is what? You know that they cannot fill in all their orders. They will sell, price will drop aggressively, then they will manipulate price back up, and then boom, the injury sell will now happen. So at this point, I've seen your market structure shift on 1 minute. You can now say, okay, let me check the other time frames. 3 minutes, 5 minutes. So if you look at 3 minutes now, they're saying that, okay, 3 minutes adds another block there, but then this week is also a point of interest. Safe to say, you can use this M1 order block, the last buy candle before the sale, before the aggressive sale, you use it, right? If you see a doji in the range, you use the doji. There is no doji now, right? So you use this order block. Some people say, okay, they can use the imbalance. Me, I don't use imbalance. I will use the order block, okay? So at this point, price has actually showed you that it is ready to sell. Then you put your short position, you have this thing. just to cover the high, 3 pips. Let me leave it at 3 pips. Oops. 3 pips SL. Your 1 to 3 is 90. Or you say 1 to 5. If you can stomach it, 1 to 5 is 15 pips. Now let's play price. Forget liquidity, all those things. Now see, patience gain. You see patience? See patience. Just see. Price is playing with you as it likes. As it won't do. But finally still came there. Sniper entry. Finally came there. At this point, this level will now serve as what? Engineered liquidity. This level will now serve as engineered liquidity. Are you guys following me? Let me delete this one. It is really this simple. You just have to be patient. So the only thing you have to now do here now is to wait. Now, if you go back to 15 minutes time frame, right? Price dropped all the way to here. This is my TP1, this level here. I expect price to come and take it out. So I can stylishly increase this thing beyond 1 to 5. That's the meaning, right? But that will now be at 117, like this. Because the intention, if this guy wants to continue bearish, the intention is to come and take out this low. That's the intention. So now let's play price on 1 minute. We've now been tagged in. Intention, first take profits, come and take out this low. Let's play. Hits. Target achieved. Simple. But you just have to be patient. You are looking for a market structure shift in the M15 zone that you have marked out. This M15 order block that led to this huge drop that caused this displacement. You are waiting for M1 to shift also inside. So now, instead of having 1 to 3.89 here, entering here, or instead of having 1 to 3 here, you will now go and have what? 1 to 5, because you waited for confirmation. Because you waited for confirmation. And this thing happens every time. The market will always give you the hints. So, but if you want to trade like this, you just have to have few pairs. Do you get few pairs? Now, see, all the bula balu that happened here. Your patience, because you were patient enough, this trade will only last you from here to here. 29 minutes. You are done. Oops. 29 minutes, you are done. Do you get? So you just have to wait for price to align back to in the direction that you're expecting. Same thing happened here. Let me show you guys gold. On gold, 15 minutes time frame. 15 minutes time frame. What did I see? A break of structure to the upside. Aggressive move with huge imbalance. This doji, that was what I marked out. This doji. So I could have actually taken an entry like this. On this doji, hover this low, take profits this high, like this. Done. But I didn't do that. This would have given me 1 to 3.87. I didn't do that. Instead, what did I do? Let me cut price back again. What did I do instead? I waited for price to come into this doji, which is my M15 order block. All right. I waited for price to come there. I dropped down to the 1 minute time frame. And I'm looking for the same thing to happen. This is a sweep. I'm now waiting for a break of structure to happen here. Remember, this is my M15 order block here. Price has tapped in. I'm waiting for a break to the upside here before I enter. Okay. So now see. With body close. Now, the moment I saw this body close, I now knew that, okay, we were ready. But this M1 here now didn't really make sense to me. So I entered this trade off of M3. The last sell candle before the buy. The last sell candle before the buy, because this is what we are having. buy, sell, buy, sell, buy. So this is what we are having. Okay, so already this close on M1 has showed me that, okay, I am ready to buy. The big boys are stepping in. Clue. Now, I go to 3 minutes time frame, and then I marked out this order block. That was the entry. I marked out this order block. And then that was when I now sent it to you guys. Where is the target? The target, if price will continue the bullish nature, is here. But now I'm getting what? 1 to 4.39 as against 1 to 3.87 with bigger SL. I'm risking bigger amounts, right? But here now, my SL is slightly tighter, right? And it's safer. It is okay. Yeah, you can buy from here. It has showed me that it wants to buy. Now I will enter. You get same thing with the gold we took yesterday. Same thing, no difference. So now, on the 1 minute time frame, see what happened. And then at some point, we saw this aggressive push. The moment that aggressive push came in, this is where you go break even. This point, you just go break even. Once there is another break of structure, second break of structure, because this is the first break. Once there is a second break of structure, you go break even. Whatever wants to happen should happen. Do you get? I see. That is it. So even if you had gone out here, that's already 1 to 3.4. You are good. Now imagine you now stack. Like, you are going to make a lot of money and you're out of the market. Whatever happens, you don't care. Okay? Whatever happens, you don't care. But if you now decide that, okay, I will take this aggressive entry without confirmation, you will set your entry here. You would have been tagged in. Your SL would have just been slightly below, and then you go for this level. Now, the truth is, this still played out because at the end of the day, if you had left it, if you had left this one, would have been, I think in New York session, would have been stopped out here, right? But you still be in the trade if you had done this aggressive entry. You still be in the trade. So the analysis was right because at the end of the day, this stop got taken, right? But me, I don't care because I've made what I've already made and I've left. You get? So you saw how gold was dancing, like so. It was basically just consolidating for a very long time. And then finally, let's see. Finally, see, it just boomed to the upside. Do you get? So this other one, if you are taking this one, would have been fine. But with this M1, you would have been stopped out at break even at some point. But then if you had gone in with the confirmation entry massively, you would have been okay. You get same thing. And this thing happens on every time frame. There was one that I missed it though, but I'd marked it out. That was on BTC. If you check, look at it, this is it. On the 1 hour time frame, right? So I had marked out this level and this level. I'd seen this guy. So again, if you check from daily time frame, BTC is still going to drop. If you check on daily time frame, you will see something. On daily time frame, look at what you have here. This is a doji right here. Right? So here, currently, you know that, okay, the market has actually shifted. And where is this guy going to? Let me show you guys something. This guy will likely, BTC will likely sell up to this range, 77,000. This is where BTC will sell up to. Obviously, it won't just happen once like that, but BTC will sell there. If you go and check weekly time frame, BTC can even sell all the way here, this level, right? Because this was where the breakout happened, right? So if you do all the way here, we check volume there. Okay, so yeah, BTC can drop all the way to this level. There's a small imbalance here on the weekly time frame. So BTC can actually drop here. Short term, BTC is coming 7,700, right? So I had already seen that. I'd seen the doji from the daily, right? So what was I anticipating? I was anticipating that, okay, when price, remember, this is the doji that I marked out. When price comes into that level, okay, when price comes into that level, what am I expecting? I'm expecting the market structure shift on H1. Okay, I'm expecting a market structure shift on H1. Now, price now came into this H1 doji, like so. Boom. And what did we see here? Look closely. Sell, buy, sell. Market structure shift. Do you guys see it? Sell from here to here, sell, buy, sell, with aggressive push with imbalance. See, this is a market structure shift, right? Change of character. So now, what am I expecting? What I'm expecting is that this H1 level right here, this level right here will hold. If I change the line chart, you will see it. Can you see? Can you see? Sweep, break. I'm expecting that this level is going to come and hold. And that is exactly what happened. So moves like this will always give you what? Sniper entry, most times. And if you give you the 1 to 3, I'll cover this high and I'll get my 1 to 3. Easy. You see that 1 to 3, sweet spot. Now, assuming you even wanted to wait for confirmation, assuming you wanted to wait for confirmation here in this H1 zone, assuming you wanted to wait for confirmation in this H1 zone, is the same thing. Same thing. You look for a market structure shift where on M5. So let's cut price back. The moment price comes there, should I send another link after this one? Are you guys there?
Yes, sir.
Okay,
Yes.
so, all right. The moment price, because I'm just saying I have like a minute left. The moment price comes into this level, you drop down to your M5. You want tight sniper entry, drop down to your M5. Once you drop down to your M5, you want to see price action that makes sense. You want to see a sweep and a break to the opposite direction. You want to see a change of character. You want to see a market structure shift. Now, look at this. Sweep. My eye is already seeing. Sweep. This is a sweep. And these things can happen fast. Can happen very fast. This is a sweep right here. This is a sell, buy. I want to see this level broken. Same thing that happened on this H1. I want to see it happen here too. Okay? I want to see this level broken. Now it has broken. You see, from this close like this, I'm entering. Forget anything. I will just enter at the close of this candle like this. I will just follow enter. Where is my immediate target? This level here, where the H1 stopped. That is my target. Now remember, if I had entered aggressive directly from the H1,